Hey everyone, welcome back. Ready for another deep dive? This one's a wild one, folks, taking us straight back to the GameStop saga a few years back. Remember that?
Oh, yeah. How could anyone forget? It was like the internet broke Wall Street.
Right. Everyone was suddenly an expert on short squeezes and hedge funds. Even my grandma was asking me about it.
And that term investment cult, that gets thrown around a lot, but GameStop, well, that really makes you think twice about it, huh?
It really does. So for those of you who maybe missed the whole GameStop phenomenon or just need a little refresher,
Mhm.
let's rewind a bit. What exactly went down?
Well, to get GameStop, you got to get short selling. It's kind of like imagine borrowing something, say a car.
Okay, I like where you're going with this.
So you borrow this car, hoping to sell it later for a profit, right? But the price of, let's say, gas, it goes up, way up. You're stuck. That's kind of what happened with GameStop.
So hedge funds were betting against GameStop, thinking it was going to crash and burn,
Yeah, they were basically betting on the death of brick-and-mortar video game stores.
which, let's face it, in the age of digital downloads, seemed like a pretty safe bet.
Right. I mean, who even goes to stores for video games anymore? So these hedge funds, they borrowed tons of GameStop shares, sold them high, hoping to buy them back later for pennies on the dollar. Except,
Except a funny thing happened on the way to the poorhouse.
you could say that. Enter the apes of Reddit.
The ape.
Yeah, that's what they called themselves, this whole community over on our Wall Street Bets. Bunch of, I guess you could say, everyday investors who saw what was happening and said, hold my beer.
So they decided to fight fire with fire.
Basically, they realized that if enough of them bought and held on to GameStop stock, they could drive the price up, and that's exactly what they did.
And the hedge funds.
Well, they got caught in what you call a short squeeze. Remember all those shares they borrowed, hoping to buy them back cheap? Suddenly, they had to buy them back at a much higher price, costing them, well, just say a whole lot of money.
Ouch. Talk about a turn of events. But this wasn't just some abstract financial game, was it? It felt different. Bigger somehow.
You're right. It became this whole cultural
It
moment.
was like the little guy finally sticking it to the man.
And that's where things get really interesting, because it makes you wonder, was GameStop just a short squeeze? Or was it something more, something bigger?
Okay, now you've got me thinking. What else could it have been?
Well, to understand that, we need to talk about the rise of the apes and their unlikely heroes.
All right, let's hear it. Bigger than just a short squeeze.
Yeah.
You've definitely got my attention. But how do you even begin to explain something like that?
Well, every good story needs its heroes, right? And the GameStop saga, well, it had a pretty unlikely one, Keith Gill.
Keith Gill.
Yeah, you probably know him better by his online alias, Roaring Kitty.
Roaring Kitty. Oh, yeah, I think I've heard that name somewhere before. Wait, wasn't he that guy, like, making YouTube videos about GameStop?
That's the one. But these weren't your typical, cat videos. This guy, Gill, he was a former financial analyst. He actually knew his stuff. He did his homework, crunched the numbers, dug into all the financials. And he really believed in GameStop, saw its potential when no one else did.
So what was he doing? Just, like, making the bull case for GameStop online?
He was sharing his research, putting it out there for everyone to see. Remember those spreadsheets I mentioned earlier? He was the one putting those together, breaking everything down in plain English, explaining why he thought GameStop was so undervalued.
Interesting, because you usually think of Wall Street, you think of all this complicated jargon that nobody understands.
Exactly. But Gill, he cut through all that noise. He was talking directly to regular people in a way they could understand, and more importantly, in a way that got them excited.
And people connected with that, didn't they?
Yeah.
Here's this guy, this outsider, basically taking on Wall Street.
He was, and it really resonated with people, especially those who felt like they were being left behind by, traditional financial institutions. Gill became this symbol of, I don't know, fighting back, taking control.
Yeah, it's pretty inspiring when you think about it. So you've got this groundswell of support online, but how did GameStop actually start to turn things around?
Well, that's when things get even more interesting. Enter Ryan Cohen.
Hold on, Ryan Cohen. As in the Chewy guy. What does he have to do with all of this?
Yeah, the Chewy co-founder. This is a guy who built a billion-dollar business, and he starts investing heavily in GameStop.
Wow, so it's not just a bunch of Redditors anymore. Now you've got some serious players taking notice.
Right. And it's not just the money, it's the way he went about it. Very quietly, no big announcements, no grandstanding. He just started making moves, buying up shares, getting involved in the company.
And that just fueled the speculation even more, didn't it?
Oh, absolutely. Every move Cohen made was scrutinized, analyzed, overanalyzed, you name it. He became this almost mythical figure, a symbol of hope for GameStop and its investors.
So you've got Roaring Kitty rallying the troops online. You've got Ryan Cohen working his magic behind the scenes. It's no wonder people were getting excited.
It was electric. And it's at this point that things start to take on a life of their own. Because it's not just about making money anymore, it's about belonging, being a part of something bigger.
Okay, so this is where we get into the whole investment cult thing. I mean, it was everywhere in the news. But were things really getting that out of hand? What did it even look like on the ground or, I guess, online as things started to spiral?
Investment cult, huh? So when people started using that term, what were they actually talking about? What did that look like in the GameStop situation?
Well, picture this. You've got like thousands, tens of thousands of people all in this online community, all convinced that they can beat Wall Street at its own game. They're hyping each other up 24/7, sharing memes, coming up with their own like insider language. It was pretty wild.
So it was like a social movement, but for investors.
It's a good way to put it. And this term diamond hands, that became like a badge of honor, a way to show your dedication.
Diamond hands, meaning holding on to the stock no matter what. It meant you were in it for the long haul. You weren't going to sell at the first sign of trouble. They were all in. And then there was the whole MOS thing.
Ah, yes, the MOSS, the mother of all short squeezes. That sounded pretty apocalyptic. What was the thinking there?
Basically, they believed that GameStop's stock price was going to skyrocket, like to the moon, literally. And when it did, they thought it would bankrupt all those hedge funds who were betting against it. It was their ultimate fantasy.
It's easy to see how that kind of thinking could take hold, especially in all that excitement. But I remember at the time there were also a lot of conspiracy theories floating around.
Oh, yeah, that was a whole other side to this. And it all kind of revolved around this term naked short selling.
Naked short selling. Okay, remind me what that is again.
So imagine someone trying to sell you something, let's say a rare comic book, but they don't actually own it yet. They're hoping to buy it later at a lower price and then, pocket the difference. That's basically what naked short selling is. It's risky, it's often illegal, and for the GameStop investors, it confirmed their suspicions that the system was rigged against them.
So they believe these hedge funds were trying to manipulate the market, drive the price down artificially.
Exactly. It became this whole us versus them mentality. And honestly, it's not that hard to understand why. When you're part of a group that feels like they've been ignored, laughed at even by the establishment, by Wall Street, it's easy to believe these kinds of narratives, to think that everyone's out to get you.
It's a classic story, really. But it's also a cautionary tale, isn't it?
It is. It shows how easily we can get caught up in the moment, in the hype.
So what are the lasting impacts of the whole GameStop saga? What did we learn? What should people take away from all of this?
Well, I think the biggest takeaway is that the internet has fundamentally changed the game. It's given individual investors a voice, a platform, and frankly, a power that they never had before. Whether you think that's a good thing or a bad thing, there's no denying that things are different now.
So where do we go from here? Could something like GameStop happen again?
That's the million-dollar question, isn't it? And it's one we should all be thinking about. The GameStop saga was a wild ride, that's for sure, but it was also a glimpse into the future of finance. A future where the lines between investing, social movements, even online gaming, well, they're all blurring.
Wow, that's definitely something to think about. Well, that's about all the time we have for today. Thanks for joining us for another deep dive. And to everyone listening, remember, the next time you see a headline about a short squeeze or an investment cult, don't just scroll past. Take a closer look. You might be surprised at what you find. Until next time, stay curious.